Well, on Wall Street, this trading day begins with the Dow at a new all-time high. It closed at 14,253 on Tuesday, well above the previous record, which was set in 2007. Let's get to Jim Cramer. He's the host of CNBC's Mad Money. Jim, good morning to you.
Good morning.
A lot of people want to say happy times are here again. First of all, let's just get to what is driving up the market this time.
This is all profits of companies. These companies are, for the most part, not hiring people. Therefore, what you see in, say, the gross domestic product, hiring, not affected at all. This is just literally companies doing well.
Companies are doing well. People also point to the Fed's stimulus efforts, the pumping of money into the economy, which raises the question, is this another sugar high? You take that away, does it all kind of collapse on itself?
You take it away, it will definitely hurt the market. There's no doubt about it. The Fed has said over and over again they're not about to make that happen. If you start seeing employment get better, they will relax. They'll stop stimulating, and the stock market will probably go down a bit.
Well, you mentioned the employment picture. I mean, I think what we've learned here is the Dow is not coextensive with what's happening in the larger economy. We still have high unemployment, and we still have middling growth. I mean, what do you think about the fundamentals of this economy?
Well, doing some work before the show, these Dow 30 stocks, the vast majority have not hired a person during this period, during this run-up. So it is just totally disconnected from what people are really feeling. That's why so many people feel badly, and yet the stock market's so good.
I was going to say, the stock market's good, but this is kind of depressing. What I hear you saying is that these companies have learned how to do more, how to continue to make huge profits with fewer employees, getting more productivity, I suppose, out of their employees.
That's the whole thing. I mean, you would be surprised to see how many of these big companies have far fewer employees than they did. So don't expect them to be the ones that take up the employment slack.
We talked about a sugar high. Whenever we see the Dow go really, really high, I think people who've lived in this modern era think, is this a bubble that's about to burst?
Isn't that the right thing to think? How many times have I been here and we've gotten to a high and it was the time to sell? I think the only thing that's different this time is if you were to go into any other asset, you're just not going to make any money. At least a lot of these stocks have good dividends. Be able to take some income in. That's okay.
Really quickly, do you think it is the time to get into the market? Because a lot of people who've been sitting out for the last few years might be thinking, well, suddenly it's looking pretty good. Is this the worst time to get in?
I think that if I came on at the all-time high and said it's a great time to get in, then I have learned absolutely nothing about the history of this market. There will be other opportunities. There will be other stocks that will go down, and that's your chance.
All right, Jim Cramer, thanks so much. Appreciate it.